There's one concept in trading that once you actually see it clearly, you cannot unsee it in the markets again. Most traders get introduced to it too early or too fast, and it never actually clicks. It's called CISD, a change in the state of delivery. And once this makes sense to you, a lot of the confusion around reading price action just falls away. So let me show you what it is and how I use it. CISD stands for change in the state of delivery, and all it really means is this: price has been moving in one direction and now it's shifting into the opposite direction. That's it. That's the whole idea behind it. But the reason it matters is in how that shift gets confirmed, because CISD isn't just price turned around. It's a specific, repeatable thing you can actually see on the chart every single time it happens. Here's how it actually forms. Let's say price is bearish. So you're seeing a series of down close candles, one after another, pushing lower and creating a low. For a bullish CISD to form, price needs to close back above the opening price of the first candle in the sequence. So it's not about a wick poking above a level. It's not about one candle looking a bit different. It's specifically about the close coming back through where that move actually started. Let's look at this example on NQ. We have a series of down close candles creating a new low. So where is my CISD? It's on the body of the first one. Once price closes back above, we have the CISD. So in this case, the CISD is confirmed, and now I'm expecting price to push higher. And as you can see, it delivers to the upside. Let's look at the other example on gold. We have a series of down close candles, in this case 3 candles, creating a new low. So my CISD is on the body of the first one. In this case, we closed above it, we have the CISD, and now we can expect price to move higher. And this is what happens. And it works the same way in reverse. So if price is bullish, is forming up close candles and building a high. A bearish CISD is forming when price closes back below the opening price of that first candle in the sequence. So it's the same logic, it's just flipped. Here's how it looks like on a real chart. Let's look at this example on silver. So we have a new high and we have a green candle forming the high. So my CISD is on the body of the first and the only candle that formed this high. So once price closes below it, right here, our CISD is confirmed and I can expect price to move lower. And as you can see, it just goes down. Let's look at the other one. In this case, we are on ES, we have a new high. So my CISD is on the body of the candles that formed this high, the up close candles. In this case, it's only this one. Now you can see that the next candle is both forming the high and the closure. It's still a valid CISD. We have the high, the up close candles that formed this high, and the closure below. So now we can expect price to move lower. And as you can see, it trades lower. Now here's why this actually matters, and it's not just the definition you have to memorize. When you see a CISD form, it's telling you something specific. It's telling you that liquidity was likely just taking above a high or below a low, that the previous direction has been rejected, and that price is now more likely to deliver the other way. So it's not just a pattern, it's a confirmation that something real happened in the market before price turned away from it. Here we are on gold on the 15 minutes, and what we can see is that price is sweeping a key level. How do I validate this key level? How do I know if something really happened at this time? How do I know if liquidity was taken above and we are ready to trade lower? Well, let's go to the lower time frames and let's validate this new high. So here on the lower time frame, we can still see our point of interest, our key level. And now we have to mark the up close candles that created this high. So these 4 green candles. And the CISD is on the body of the first one. So in this case, I'm just waiting for price to close below it. My CISD is confirmed, and I'm expecting price to move lower, validating my point of interest above. Now, here's the part that actually matters for how I trade it, because CISD on its own means nothing. I never use CISD by itself, ever. It has to be paired with the full narrative, your bias, your structure, and where price is sitting in relation to a point of interest. So in my process, this is where CISD fits in. Once I have my higher time frame bias and I'm watching my structure on the middle time frame, I'm using this CISD to confirm that a high or a low is actually real before I even think about an entry. So this is my way of validating my bias by validating the high or the low. And on the lower time frame, that same CISD is one of the last things I want to see line up before I take the trade. So it's the same idea. I have my structure on the middle time frame. How do I validate my structure? with the CISD on the aligned time frame. So inside my time frame stacking, that's really all CISD is doing. It's confirming the bias on one time frame and confirming the entry on another. So it's the same thought process both times, because either way we're just trying to validate that a high or a low is real. It's just on different time frames. Let's look at this example on YM. Here we are on the daily, and what I can see is that we have an ERL and we have a C2. How do I validate my bias? How do I know we are rejecting this level? Well, let's go to the aligned time frame and look for the CISD. Here you can see my point of interest. And now let's look at the downclose candles that created this new low. We draw the line on the body of the first one. And here we can see that the bias is validated. So this low should be protected. And we can expect price to expand higher. And we can do the same process for lower time frames. So if I'm looking for my entry, let's zoom in. I have the same exact thing. I have this low that's being swept. I have a C2. How do I validate this new low? Well, let's go to the aligned time frame and validate this low. What do we need? We need the CISD. So this new low is right here. The downclose candles that form this low are just two. So I'm placing the CISD on the body of the first one. And here is where I can place the entry. So in this case, my stop would be at the low because now it's protected, and your target on your next draw liquidity. So you see how it's the same exact process, just on different time frames. Let's look at this example on gold. Here we are on the 4 hours, and we can see pretty much the same thing. So we are sweeping a high. Now, how do we validate this high? We go to the aligned time frame and we look for the CISD. My CISD is here. We look at the up close candles that formed this high. Now my bias is confirmed. I know that something happened here above, and now we will most likely go down. So my bias is validated. Now we can do the same thing for the lower time frames. So when I'm looking for my entry, what I need is my point of interest. Let's zoom in. I have my point of interest here, which in this case is a fair value gap. We haven't hit that yet. Okay, now we have our new high. How do we validate this new high? Well, we go to the aligned time frame and look for the CISD to validate this high and this information. So here we are on the lower time frame, and we're gonna do the same thing. This is the new high. Where is my CISD? It's the up close candles that created this high. In this case, it's just only one. So my CISD is gonna be here. Once price closes below it, that's where I can expect price to move lower. And in this case, if I were to place my entry here, with the stop at the high, which is now protected, we can expect price to move lower. With a bit of choppiness, but price definitely move lower. So now, if we go back to the 4 hours, we see clearly that this was a real high, and we indeed expand lower. Now, this is where most people get confused, so let's clear it up properly. CISD and market structure shift are both used to spot a possible reversal, but they're looking at completely different pieces of price. And that difference actually matters a lot. CISD is focused on the candle body. It happens when an opposing candle closes back past the opening price of the previous candle or the series of downclose candles that created the low or the high. And that gives you an early signal that the buying pressure or the selling pressure is shifting. MSS is focused on the swing point itself. It happens when price actually breaks and closes above a swing high or below a swing low. And that's what confirms a broader change in the trend. So CISD gives you the early read and MSS gives you the structural confirmation. Two different tools, two different jobs. So let's see how it looks like in a real environment. Here we have a new low. Where is our CISD? It's on the body of the downclose candles that created this new low. So once price closes above, here we have our CISD. Where is the market structure shift? It's here above. Once we close above this line, above this high, we have our MSS. Okay, here the MSS is confirmed. Now, here's where most traders go wrong once they know both of these. The first mistake is treating CISD and MSS as the same thing and trading them the same way. But as we saw in the examples, not only they look different, but they come at different times. So you cannot treat them as the same thing and you cannot trade them the same way. They're not interchangeable. One is based on the open and close of a candle and the other is based on a swing point breaking. And mixing them up leads to the wrong stop placement and the wrong expectations for your trades. The second mistake is trading every single CISD you see. CISD has a higher false signal rate on its own, and without the higher time frame, A lot of CISD is just reversed without ever leading anywhere. And the third mistake, especially if you're on the lower time frames, is waiting for an MSS before you take the entry. Because on something like a 1-minute chart, the MSS often shows up too late. So this is why you should use the CISD for your entry on the lower time frames and use the MSS to confirm the bigger picture. So to put it simply, MSS is the most reliable of the two overall, but I still use the CISD constantly, just with a lot of confluence behind it. So it's the very last piece of the puzzle for me. It's not a whole idea on its own, and that's why it works so well when the full narrative is already supporting the idea. Now, these examples are going to prove how the CISD on its own means absolutely nothing, and why you should always have the narrative supporting your idea. Here we are on gold on a random chart on the 3 minutes. We have no context, we have no bias. So let's just look at the CISD by itself. Here we have a new low. So my CISD is on the body of the down close candles. And here I already have my confirmation. So what happens if I place my entry right here with my stop at the lows? Let's see what happens. Well, it fails. Now, let's look at this new low. Because we have this new low, we can say the same. Let's look at the down close candles that created this new low. What if I place my entry here? It fails. Let's look for another low that gets confirmed by a CISD. Okay, here we have a new low. My CISD is here above. Let's see what happens. I get my confirmation. My low is very low in this case. Let's see what happens. And you get stopped out. This is proving that CISD on its own means absolutely nothing. So if you want to have a 5% win rate, please go ahead and trade the CISD on its own. But I promise you, you will never find consistency with this. Let's look at the bearish example. We are on oil. We have a new high. We have the CISD. What happens if I go short? I get stopped out. I have a new CISD here. We have a new high. We have the new CISD. And what happens? I get stopped out. And I have a new one here. A new high, a new CISD. Well, this is already stopped out. So you see how the CISD with no context, no narrative, no confluence means absolutely nothing. So this is not a strategy. This is just a tool you can use, and it's going to be super helpful for you to find exact entries and exact stop placements, but on its own means nothing. It's just like trading IFVGs on its own. You're probably going to have a 2% win rate. And it's not because the tool itself is bad. It's because you're using it wrong. So don't make the mistakes of trading these tools as a strategy, because they are not. If you want to be a consistently profitable trader and eventually a full-time trader, you have to know how to read price on the higher timeframes, because those timeframes are going to tell you why price is moving in a direction or the other direction. So put your focus on how to read price in the first place and use these tools as extra confirmation or just confluence, because that's what they're here for. So to bring all of that together, CISD is a change in the state of delivery, the shift from one direction into the opposite, confirmed by a close back through where the previous move actually started. And whether I'm using it to confirm my bias or to confirm my entry is the same idea both times. I'm just applying it on a different time frame. Just be aware of the difference between CISD and MSS, because they're looking at two different things. CISD is about the candle close itself, and MSS is about a swing point actually breaking and closing beyond it. But if there's one thing I want you to walk away with, is this: never use CISD on its own. Ever. It has to be paired with the right narrative, the right bias, the right structure behind it. Otherwise, you're just reacting to a candle close with actually nothing to support it. And that's exactly how you get caught out. If you want to see exactly how this fits into my entries, go watch my entries video. And if you want the full picture of how this fits into my whole framework, my strategy video walks you through it from start to finish. If this helped make the concept click for you, hit subscribe and turn on notifications so you don't miss the next one. Let me know in the comments what you want me to break down next, and come find me on my Instagram at Sierra Trades. That's where I post the day-to-day content. I'll see you in the next one.